Testing, testing, testing. JB here, JB here. September 30th, 2021. Just going to talk really quick. Obviously, the market trying to bounce again for the second day in a row. It was a mixed session yesterday. The Nasdaq's down 3 days in a row. And we'll have to see how things play out. I put on a watch list this morning. I always say I'm not putting my bear suit on. Obviously, we're not that far away from all-time highs. So it's kind of, at some point there'll be a correction, right? And I think the point is not to people like to look for it and make it happen. If it happens, it happens. I just want to be sure that if we do have some bigger move in some positions to take advantage of it, that'll help offset some of the calls that I'm in. So that's kind of the thought process. So yesterday I added some more puts, Twilio puts. Great story. And back in May when it was selling off from the 400s into the 280 range, it did it on no catalyst, no news. It just had solid earnings. It just because people are worried about rising rates. And when yields start to rise, some of these momentum names that price in huge growth, they start to get come under pressure because they're not as attractive, right? So we'll see what happens today and tomorrow. I think we need some kind of flush and reversal. And back in the sell-off in February and in May, we had a huge gap down, maybe it was 1% or so, and then the market closed green. Maybe that has to happen for 2 days in a row. I don't know what that looks like, but that's kind of what I would want to see before I start getting a little confident on some type of bounce. So I'm not really looking to add any put hedges today. I mean, we'll see what happens if the Nasdaq reverses into the red. Maybe that's a possibility, but I'll hold my Twilios. Twilio had a positive analyst comment this morning too, so maybe it's going to get a little bid to 317 or so before fading. And then I still have the MDB 425s. Didn't really do much despite closing down $5 yesterday, but those will be my two trades I'll look as protection for my strikes that are underwater. DraftKings, the JYNT obviously doing horrible. TripAdvisor, which has just done nothing since I got the calls. So those are kind of names there. Also, take a look at AutoZone. I mean, AutoNation. I don't know what O'Reilly's done either. Those are the names in the do-it-yourself auto sector that have just been on a tear, and I think a lot of it has to do with the fact that folks can't get cars, right? So, I mean, there's a supply issue. There's issue getting new cars. There's issue getting used cars. And if anybody has a car that, especially if you're owning a car, if you're instead of doing a lease, you're buying a car or you have it paid off in full cash, go online and tickle your fancy in regards to trying to find out how much folks will pay for your car, because I guarantee it's a lot more than you ever thought it would be. That's kind of the situation. You get more for your used car now than it used to be worth. And so because of that, obviously, if you sell your car, how are you going to replace it? So if something goes wrong with your car, people are, in lieu of trying to get a new lease or whatever, they're probably going to use AutoZone and some of these other names as avenues to get repairs. So never really liked AutoZone because I think at some point the YouTube and Amazon tandem starts to take share in that space. And not only that, when you take a look at new technology, it's not like you can buy all the parts for a Tesla car at AutoZone, right? So good one, UPB. So I think at some point those are the ultimate shorts, but I thought that a while ago too. So that hasn't come to fruition yet. Maybe it does at some point. Cars still need batteries. Cars still need windshield wipers. Cars, people do their oil changes. People need the green tree air freshener in their car. So those are all things I guess they're not going to go away anytime soon. But I think at some point they do. But needless to say, I think AutoZone, you take a look at a huge move it's had already. I think maybe $1,800, and maybe it happens today and tomorrow if the market finds a bid. So I'll possibly look for some lottos there. Sherwin-Williams, for the second time in a month, came out with some revised lower guidance. I talk about a lot when companies lower their guidance enough that it's like pulling the Band-Aid off. So now it resets expectations. It's painful at first, but then it bodes well for the future. And you have analysts out kind of reiterating their bullish stance on Sherwin-Williams. Pinto mentioned a lot too. If you go to your local Home Depot or Lowe's or even your local Sherwin-Williams store, you definitely see a lot of empty holes in regards to paint. So there's the supply issue, the cost issue, logistical issue. All those things are kind of weighing. But then you look and it started reversed off the gap yesterday after its release, and closed barely in the green. And you look, maybe it heads up into the 290s. So only monthly strikes on Sherwin-Williams, but definitely a name I'm going to be watching today. And then the SPY. And I put up two charts. One is my long trend. I might have had the annotations on my SPY chart for over, maybe it's the last 10 years on stock charts. So that was one of the charts that shows maybe it's like 424.75 or so on the SPY if we can't get back over the 50-day moving average. That's my concern. And take a look at today too. TLT seems to be going in lockstep. So as TLT goes down, that means yields are rising, and you see the NASDAQ selling off. So we'll have to see if this tandem continues to play out, or it's just short-term profit taking, which it has been over the last, in this bull market. There's always been profit taking, and when we got highs and everybody likes to start hyping, this is the next big bear market or correction that's happened, and then the market all of a sudden finds a bid, and we're back to all-time highs. So we'll have to see how this all plays out. It's the end of the third quarter. Market's up 1.4% for quarter three. So as long as we don't reverse and close down over 1.4%, it'll be, I don't know how many quarters in a row of green. I guess obviously since this quarter one of 2020, I would think, right? I think that's it. DraftKings, that $50 handle, you would think it's such a seasonally strong time for DraftKings, right? You have MLB's kind of getting into their playoffs and excitement. So if you're watching a game, what better thing to do than to put some kind of to augment your experience by putting some kind of bet on. And then you have football starting, hockey starts soon. I'm just kind of shocked it's still kind of languishing, and maybe there's some concerns over its acquisition. You have ARK buying more DraftKings shares. I don't know if she's become such a lightning rod for bearish folks that they're just finding any of her names and just shorting it. I get some of it. People look at her and whether they're jealous or they just think she's nuts. I remember when she said Tesla was going to be a $3,500 stock, and this is pre-split. People thought she was nuts, and then sure, it comes to fruition. And it's the same thing. I mean, who knows? Maybe she's wrong on everything, but to sit there and just to base your bull or bear case on someone being in the stock or not being in the stock is kind of like mind-boggling to me. But she added more DraftKings shares yesterday. I don't know how much. Obviously, it's not doing too well for the stock. It is gapping up in the pre-market. It gets over 50. Maybe I'll look for some November strikes, because I think at some point that thing's going to take off, especially if there's some kind of catalyst. Maybe I'll try and look to get some calls to encompass earnings. I think that's it. I'll try and get back on later. Let's have a great day, folks. Rock and roll.